Here's another bullish signal on the S&P and the broader markets in general, and that is the interest being paid on risk-free investments right now, such as high-yield savings accounts, bonds, etc. So as the Federal Reserve just finished cutting rates and looks like they're going to hold, these interest being paid on these high-yield savings accounts are coming down. So the argument has always been, do you put your money in stocks or do you keep it in cash in an investment account? There's always a power struggle there. Like we saw in 2020, when interest rates were lower than 1%, these cash accounts paying next to nothing, then everyone is sinking money into stocks. That's the obvious answer. It's worth the risk when a savings account is paying close to nothing. Now, compare that to 2022, where we saw a massive spike in interest rates to kind of slash that inflation that we saw from 2020. And all of a sudden, these risk-free investments are looking a lot sweeter to the average consumer. 5% returns make people say, okay, maybe cash and these risk-free investments are the better deal, considering that stocks have their implied risk and the upside isn't really there anymore. So right now what we're seeing is that the market is finally reacting to the rate cuts that we saw at the end of 2024, and it seems like they're going to continue to go down into 2025, and that has typically been a very bullish signal for the S&P and for the market in general.